Welcome back. Well, on to our movers and shakers segment where we track a whole host of stocks that are buzzing in trade. First up, we are starting with Vodafone Idea, which is reacting to what was a mixed set of Q1 FY26 numbers. Vinny, tell us more.
Hi, Ekta. So yes, Q1 FY26 not that great. When you look at it, net losses surely have narrowed down versus what we saw in the last quarter, but still at 6,608 crores versus 7,166 crores. Also, the net loss figure is much higher than what the street was expecting. Revenue 0.1% growth sequentially. Nothing exciting there. Margins have seen a contraction as well. ARPU 165 versus 164, so 0.6% improvement that's coming over there. Now, company continues to report a loss, and this is the 30th quarter that the company is reporting a loss consecutively. Total subscribers also a bit muted, 19.77 crores versus 19.82 crores. So keep an eye out on that. Not a great number, but yes, today the markets are chirped up in trade, and that is what is keeping the stock abuzz as well. But Ekta, we're also looking at Glenmark Pharma. That seems to be a bit under pressure today.
Well, yes, Glenmark is under pressure because it was a subdued set of numbers. We had the revenue, which was flat, the margins, which were lower than expectations, and the profit, which was lower than estimates as well. India was up only 4% year on year. North America did see a sequential rise, but was flat year on year, and Europe declined year on year as well as Q on Q. The company has said that they have debt of around 1,500 crores on their books. The proceeds from the ISB 2001 deal that they struck with AbbVie is expected in September this month, or rather next month. Glenmark is targeting 23% EBITDA margins Q3 FY26 onwards, so that will be important to watch. They are going to be focusing on high margin products in the domestic market. They're looking to launch around 10 to 12 products in the US, and they've largely completed remediation work in Monroe, one of the facilities under the US FDA scanner, and will be starting commercial production soon, and possibly hopes to get the remediation done soon, and they're looking to grow in double digits in FY26 in the European markets. That's on Glenmark, but Astral and Supreme Industries and focus on the news on the back of news of anti-dumping duty on imports of PVC resin. Ria's here to tell us more.
Well, yes, today Astral and Supreme and in fact some other pipe players have also been trading higher, and this is after the DGTR has recommended the imposition of anti-dumping duties on the imports of PVC resin from a whole host of countries, and this is for a period of 5 years. Now, the reason that this is positive for plastic pipe players is that this imposition of ADD is going to lead to stabilization of PVC resin prices, which is the key raw material for the company. This is also going to lead to some normalization of channel inventory for these companies. Remember, the recent price volatility for PVC resin has impacted plastic pipe companies and has resulted in channel destocking, and it has impacted the primary sales volumes for all of these companies. In fact, on the back of this, PL has also said that they expect Astral, Finolex Industries and Supreme Industries to be the key beneficiaries of the likely imposition of the anti-dumping duties on PVC resin, which is going to curb volatility and bring price stability. On the back of this, even some PVC resin manufacturers, the likes of DCW and Chemplast, are also trading with gains of around 4 to 5%.
Okay, and thanks so much for that. But last, we also have Zaggle Prepaid that's buzzing in trade as well on the back of some commentary that's coming from the management. Gaurav, take us through that.
Well, yes, when it comes to numbers, we have got good set of numbers, 31% increase in revenue, around 37% in EBITDA, and lastly, profit increase almost by 54% on a year-on-year basis. Now, this was also led by the ESOP cost, which companies said that will remain in the range of 6 to 7 crores. In fact, it has come down almost by 41% on a year-on-year basis in this quarter as well. When it comes to management commentary, they are saying that 35 to 40% of top line growth is what we can expect, and at the same time, EBITDA margin could be somewhere in the range of 10 to 11%. In fact, during the conversation with us, they also indicated that the 35 to 40% growth guidance is actually conservative because inorganic growth is likely to kick in from second quarter, and that is the reason why this growth can actually exceed, and they will relook at the growth target in the second quarter. At the same time, they also said that they also have 570 odd crores of cash which is with their company, and they will also look out for inorganic opportunities even further. So definitely good numbers, good outlook from the company, and as a result, we are also seeing this momentum in the stock price.
Okay, Gaurav, thank you so much for that. So those were the top movers and shakers this afternoon. But with that, we are absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next to Business Lunch.